6.77 lakh crore in the second half of the fiscal year 2025-26. You're looking at the important numbers on your screens at the moment. Rupees 10,000 crore, in fact, will be borrowed through issuance of sovereign green bonds, and the gross market borrowing of rupees 6.77 lakh crore shall be completed through 22 weekly auctions, is what we're given to understand. Let's also tell you that the government will in fact continue to carry out switching or buyback of securities. In fact, a lot to be decoding as far as that is concerned. So let me take the opportunity to take it across to my special guest, Madhavi Arora, lead economist Emkay Global, joining me. Madhavi, thank you very much for taking the time out and joining us here this evening on ET Now. It's always a pleasure when I'm in conversation with you. So thank you for joining us. Let's begin with, how we're essentially looking at it, given the fact that the numbers here, it's 6.77 lakh crore via bonds. This is in the second half of the financial year 25-26. While you, of course, give us those insights as to how you're reading into this, if we were to able to compare this with the borrowing in the first half as well, and in terms of the factors, all in all, how are we decoding this?
So I think the first and foremost thing the market was watching out for was basically, how the borrowing calendar tenor-wise would turn out to be. There was no surprise in terms of the, gross and net borrowing for the second half, because the government of India anyway has indicated that they are not going to be changing their annual borrowing calendar for dated securities. So there was no surprise in terms of the overall issuance, which is 6.8 lakh crore. But what market was watching out for was the share of tenors. So basically what had happened in the last couple of years is that the long-only players started, their AUM was increasing much more than the, captive players. And thus a large chunk of the market borrowing was basically happening in 30-year plus papers. In fact, it had gone to as high as 38% by end of last year. This year, first half, it had come down to 35%, which is 30-year and above papers. And we saw a massive demand drought for that segment, because we suddenly saw change in the risk appetite and the investment appetite of these long-only players. The market was hoping that the government of India and the Reserve Bank of India essentially changed the way they are issuing papers in line with the market demand. So not only the captive investors like banks seem to be sort of having an uneasy positioning, but even the long-only players who are buying these, longer term papers also had, shown less inclination towards buying long papers. So I think to that extent, given the fact that 30-year and above issuances have now come down to less than 30%, which is much better than what market expected, I think it's going to be a massive relief for the market, and I think you should see some, bull flattening in the market GSEC curve as we open on Monday.
All right, Madhavi. So fair to say that positive sentiment is what is anticipated here. But I just want to touch upon what the DA secretary has also said here. One of the comments coming in is that based on the consultation with the RBI and the market, the cutting issuance of long duration bonds, how are we reading into that as well?
That's what exactly I said. The long only papers, the 30-year plus, their issuance share has massively come down. In the last first half of this year, it was as high as 38%, and that was essentially done in line with the demand of, longer investment players in the last 2 or 3 years. But what we've seen in the last 6 to 9 months is that these players, the demand for longer papers is also sort of exhausted. Their AUM is not incrementally growing that much. The investment guidelines for players like NPS and even insurance to some extent has sort of move more towards equity. So whatever increment they're getting in the AUM is, getting more biased towards equities. And thus, there is a sense of uneasiness in terms of the issuance versus demand on the longer end. And that is what the policymakers have tried to address. So we are seeing, the longer end paper, 30-year plus papers, as I was mentioning earlier, the share of that has come down to 29%. It was as high as 38%. In second half of last year and around 35% first half of this year. So clearly market is going to rejoice that. And as I said, there was a lot of uneasiness with regard to, how the market imbalances were playing out in the yield curve. That essentially has flattened. Exactly what I said earlier as well.
Has been factored in. Correct, that's right. You did put that into effect as well, but just with the fact that what the TA secretary happened to mention. But fair enough, Madhavi, because the other aspect over here is that the government has said that they're confident to sticking to the fiscal deficit target of 4.4%.
Yeah, so I think, see, there are risks to the fiscal number, not just because of GST. That probably, as per the government number, may not be a big threat because it would be disproportionately borne by states than center. It is going to be anyway, as per their maths, less than 0.1% of GDP pressure on them. So I think that could be still manageable. But beyond that, also, we are seeing the tax outcomes being much lower than budgeted, and the tax buoyancy needs to be nearly double now for the rest of the year for them to be able to catch up to the tax targets. So clearly, there's a pressure on the revenue side. We also would have some offset in the form of probably, better divestment than what we've seen in the last few years. Also, of course, the RBI's dividend has been much higher. PSC dividends also would be healthy for this year. So I think they could get some buffer from that front. And also on the expenditure side, so far in the first half of the year, they have been pretty decent in terms of their spending profile. But I have a sense that they can cut down on certain miscellaneous capex if they want to match on to the 4.4% fiscal target, which probably could give them further buffer. So 4.4 is, still a bit of a marginal risk for me in terms of the fiscal target. But, in the past, although they have managed to sort of stick to their numbers and they're very committed in terms of ensuring that they do reach their targeted number. So, it's still going to be a very close call, but I think they might just end up sticking to 4.4. At least as of now, the borrowing numbers are not suggesting that they are slipping.
Okay, but given to understand that the DA secretary has said that they're confident of meeting that target. Of course, time's going to tell us, Madhavi, how this is going to pan out. But I also want to get your attention to the 10,000 crore allocation for the sovereign green bonds. How significant is that within this borrowing plan? And how do you really think, if I could ask you, this would also, you're approaching the investor appetite shaping up for these instruments as well?
I think they had lost a bit of an appetite. So I think my sense is that, they've been... The issuance of green bonds actually has has been relatively lower than what it used to be a year ago or so. I think there's, an average appetite for these kind of bonds. I don't think they've really increased the allocation of green bonds. I've not seen this for second half numbers, but I think if I recall in the past 2 years, the issuance of green bonds has been steady, but not necessarily very enthused in terms of, the government has not been enthused in terms of increasing the allocation of these papers.
Right, Madhavi. Fair enough. And on that note, want to thank you, in fact, for taking the time out and joining us here for this quick chat about how we're reading into it. But finally, like I said, only time's going to tell. But you have said heads up that we'll be looking at something positive on Monday when the markets open. So we'll keep our eye out for the same. But thank you for taking the time out. And on that note, that's all that we have for you in this edition of News Now.